David, good to see you. What do you do with Cisco?
Great seeing you again. You know, Kelly, Cisco is a very difficult name really to analyze. I mean, on one hand, you got the stock trading at, say, 14 times earnings. On the other hand, the company is going to be facing some very difficult comps moving forward, especially within their order cadence. I mean, in a nutshell, you know, yes, the company beat on a lowered bar as expectations were really reset last quarter. The street was calling this quarter for like negative 3% growth, you know, ended up coming in at flat. So, you know, as an investor, you'd say, all right, okay, you know, flat growth, I guess that's better than, you know, down 3%. But, you know, that doesn't really get me too excited. I went to a Kid Rock concert last night. That gets me excited. This does not. You know, I understand that these numbers, they're in the past, and you really got to start focusing on the future. I mean, but you just have to look at order growth. It was negative 6% year over year, but the company goes, no, wait. You know, it was actually up 15% sequentially. You don't want to look at that year over year number. But we know as analysts that the fourth quarter, well, that tends to be one of the seasonally strong quarters where you get an average growth of like 14%. So that makes me very worried in the future looking at next quarter when you can get negative year-over-year growth and negative sequential growth. So, you know, ultimately we've seen some downgrades in this space on macro concerns. I just think that there's a lot of negative sentiment out there in this name due to really innovation issues. I mean, they're losing market share in almost every single segment of their business, from networking to security. So I think, you know, valuation, if I owned it, would keep me in this name right now. But over longer term, I probably wouldn't be an owner given the lack of execution on innovation.
You look like you're in my kitchen, to be honest with you, but that's okay. And I obviously you like Kid Rock, but you also like the old course at St. Andrews. All right, let's move on to Walgreens Boots. A large judgment against them, CVS, and Walmart yesterday. But is it really? $650 million, I believe, is what the amount is, but payable by those three over 15 years. Now, obviously, there are other cases coming. Obviously, they will appeal this. Is that alone a reason to sell, which is the rating you have on this?
No, I would not sell on that issue itself. I mean, you hit the nail on the head right there. The opioids issue, well, it's going to continue to be a headline risk for both all of these names, Walgreens and CVS, because they've chosen to fight these cases on a case-by-case basis. You know, this just happened to be one of the larger ones. I mean, you had a series of verdicts come out of Florida earlier this year. So really, unless these companies change their tone and really go after some type of global, you know, settlement, which I just don't see happening right now, it's just going to only remain a headline risk. I do think that, on a side note, that Walgreens, they do probably have a little bit more of a liability problem than CVS because, one, well, they had to pay out a pretty large settlement back in 2012 with the DEA on this issue. But secondly, they've had to control their own distribution, something CVS did differently. But that's not why I'm a sell here. You know, the verdict doesn't really change my thesis at all. We don't want to own this name because of the structural issues that they have. I mean, look, the company has become a price taker. Over the last 7 years, they've had about 1,000 basis points worth of gross margin degradation because of reimbursement rates continue to get reset lower, and they've just really, you know, participated. So you couple that with the fact that I think management has really underestimated the positive effects that COVID had on their business, potentially creating even more difficult comps next year. So, yeah, I don't like this stock at all. I would stay far, far away from it.
You get 5 words on Verizon, David. What do you do with the stock?
If I were to get 5 words, I would say that this downgrade is a rear view mirror analysis. Majority of what they said is already priced into the stock. I like Verizon at these levels.
Shepard Smith here. Thanks for watching CNBC on YouTube.